Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. And we are going to start out with those markets, specifically the gold market, as we saw a great bounce come in this past week. After coming off that 1550, 1560 high, we dropped pretty deep into the 1400s. A little V turnaround. So the question is, was that a reversal, or are we going to see a continuation back down now that gold's back up in the low 15s?
Yeah, we're sitting at 1505 today. 2 days ago we were at 1490 or so, and it is bullish that it's sitting here, but quite frankly, I just can't buy into it yet till we start flirting with that previous high. I'm expecting there to be a little bit of a downturn, and that's healthy. The only indication that would steer me another direction is if some major piece of news comes out, because gold and silver have definitely gotten more sensitive to major news, whereas for a while it seemed like for years we were almost numb.
Yeah, Tori, we got a piece of news yesterday from the Fed, and again a little bit of news today, but they're going to go ahead and expand their balance sheet, moving into some more QE. So, we didn't have a pop yesterday from that, but as we know, long term, that will have a large effect on the price of gold.
And we're not seeing a heck of a lot of response from the equities market, thanks to all this new quantitative easing program over the last couple of weeks. The equities spiked down pretty aggressively. I think about 5.7% off the recent high, which was a lower high than the past one. So the equities market, to me, is starting to potentially put in a top, while all indications argue still bullish in the Dow. We will need to see a substantial lower low coinciding with this recent lower high. So it's certainly possible we could see gold doing a little reversal here off that like 1460-ish number. But again, I don't buy it quite yet, because you go back to Elliott wave and ABCD pattern theory, and there's a very good argument we're in a D-wave pattern and we could see lower pricing, lower opportunity in the gold price.
Yeah, I agree. I mean, 1480's held pretty firmly here. 1560 was sort of a flash, but we've been sitting on the lower end of this channel. Silver has too. That gold-silver ratio has hovered around 84, even 85 to 1. So still a lot of weakness in silver, the white metals in general, because platinum had come down a little bit too. Palladium is the one anomaly in the group of four metals. And, what we're watching here again, though, too, is the initiation of post-fourth quarter fiscal year for the federal government as we start to get news coming in budgetarily from them, but also news coming in terms of corporate earnings as you get into the quarterly reports, whether people lived up to expectations or came short of expectations. Those are the kind of things that can create that snowball effect in the equities weakness or reverse it, because we did see in the Dow an 1,100-point reversal from peak to trough. And quite honestly, I think we're also coming into a season here where we tend to get strength in the metals and weakness in the equities markets.
Sure, and I do think it's important to say when we're talking about weakness, this is a weekly show. We are talking about weekly market moves in the show. So I don't think anyone at this table thinks that the precious metals market hasn't started at least that first phase of the bull market, which we talked about phasing in markets last week. And so what we're talking about here is, what do we see gold doing over the next couple of weeks, not over the next 2 years?
And Miles, just to touch on silver again, before we came in the studio today, I was watching you look at your charts like you're always doing, and you pulled up the silver chart and just said, uh-oh. What was the uh-oh for?
Well, the uh-oh, it's kind of funny. The uh-oh was because silver actually looks like it is reversing. So as I finish up my conversation here about how I think gold should be inching back down, I flip over to the silver chart and I see us putting in a sideways rising channel, higher highs, higher lows. We came into that 50% line on silver, and I had this moment of walking in, okay, the Dow's down, gold's probably going to take another leg down, D-wave correction. Let's confirm with silver, and silver looks like it might have just put in a bottom. So my uh-oh was more from the standpoint of it looks like the metals are starting to detach from each other a little bit, and this gets back to our ratio and ratio trading strategies that we employ with our clients that Tori talked about just a moment ago. So we are expecting to see silver and especially platinum play catch up, and we may see a detach of the metals from each other from time to time, which allows us to make up some of that ground. We went from 90 to 78. Then we bounce back up to 85. We're probably not going back to 90. So maybe the next move takes us from 85 down to 68, and then a bounce back up to 75 on that ratio. So that's what caught me off guard earlier. Is every time you see something in the charts, you want to find some confirmation, and silver didn't give me the warm, fuzzy downward confirmation I was hoping for.
Well, that can actually be taken as good news for the existing metals holder, and that's sort of a good technical summary for this week, good chart analysis. Let's jump into the fundamentals, Eric. A lot going on even in the last 7 to 10 days. What do you see here as primary takeaways?
Man, where do you start? We've got, we already explained, the Fed expanding their balance sheet. We had the FOMC minutes come out today that showed that the majority of the Fed governors are looking for another interest rate cut this month. You had a few of them that wanted a 0.5 point cut. And then you actually had a couple that said we should never be cutting. Why is this still continuing? But majority still are looking for a 0.25 point cut. We also had the news today that the UN is saying that they're possibly going to start defaulting on their bills by the end of the month, as well as their payroll, because the U.S. has not forked over their annual fee. We owe the UN right about $1 billion now, and Donald Trump is not willing to pay that. It's not something he's just willing to write a check for. He's pretty adamant that the U.S. has been treated unfairly in this deal, and it's time for some other countries to step up. But beyond that, we've still got some geopolitics stuff going on, Tori, that I know you'd love to touch on with what's going on in Syria.
That could be a show in itself this week. Before we leave the Fed expanding the budget sheet, certainly a slowing global economy, continued trade war, economic uncertainty, all of those are realities, but low unemployment numbers. I don't know how much lower these false unemployment reporting numbers can actually get, before they finally claim that you're at full employment. So that does actually argue for a rate change. But I would stress to you, go listen to the McIlvaney Weekly Commentary reprise of the Carmen Reinhart interview. Absolute must. If you want to understand what's going on with these central bank manipulations of interest rates and the pros and cons to that, this is like a 3-year retrospection, and you've got to go listen to that. So yeah, geopolitically, just get back up ahead, Eric. Syria, Turkey, the president saying, look, we're going to end these endless wars, and it's going to leave a void. I mean, the concern there is that you're leaving some allies hanging in the region, but most importantly, he's trying to state here, look, we are not going to play in this. If you're going to invade and come into Syria, we're out. The U.S. isn't going to support. We're not in there to help people in causes that we don't agree with, but also just the endless war. I don't know what effect that's going to have on gold. Gold's up today. Quite honestly, it would have to be a real disruption caused by Turkey in the region in order for us to see gold take off and run, or oil for that matter, because oil's just sitting down here around 53 also. Again, an indication of economic viability. More importantly to me than geopolitics right now is probably domestic politics and the strains and stresses associated with the impeachment inquiries and the executive branch deciding that they will not cooperate. This is going to get into testing our rule of government in all ways, shapes, and forms, including even the Senate having an opportunity to rule on whether there will be a trial, which it sounds like there would be if the House formally impeaches him. But all that gets lost in just the political theater.
While we're speaking domestically, Tori, to get outside of the politics, as we said, there's a million things fundamentally we can talk about, but we also had the news come out, I don't remember if it was late last week or early this week, that GE is freezing over 20,000 pensions in the plan to restructure their debt. Miles, we've seen this before from some large companies, but what kind of signal is this, and what does this tell you?
Eric, I think it's signs of times to come, and the question, of course, is what's federal government's response, and are we looking at more quantitative easing, which is currently going on in the banking industry this month? Does that extend out to the production and industry in the corporate world?
Yeah, I totally agree, and I'll tell you what else it tells me. 1, GE's not an isolated case. 2, it's time that you take your retirement into your own hands. We all have to be doing that. If you're counting on Social Security or your pension, whether it's government or corporate, that's the wrong target. That could be icing on the cake for maintaining a standard of living, but your basic cost of living, you've got to move a portion into the metals. You've got to do a precious metals IRA or sock it away in a safe and home.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. You're welcome to hit that subscribe button, ring the bell to get notified each week for our new shows, and hopefully next week we'll have some good market moves to dive into. In the meantime, keep an eye on the markets. Head on over to our website, McIlvaney.com, Twitter, ICA Gold, or Facebook, McIlvaney Financial. As always, if you want to speak with us or one of our fellow advisors here at McIlvaney ICA, you can give us a call at 1-800-525-9556.
Thanks for listening.
Have a great week.